Today's video, I'm going to be going over some very deep top-down trading work, starting on the weekly down to the daily and the 4-hour, and just understanding how I, as a 7-figure smart money trader, really understand and read and trade the market from a top-down perspective. So you're going to want to stay tuned for the whole of this video. And if you haven't already, do go ahead and subscribe to the channel, leave a like down below, because we're going through a lot of effort just to give you guys free value time and time again. So without further ado, let's get started, right? Let's say we have a weekly low, and then we have a weekly high, and now we have a weekly low. And so we can very clearly see the order flow is bearish, right? The banks and financial institutions have the overall macroeconomical intention of taking the euro against the dollar down probably below this level, 1.06, especially with what was going on in the world at this time. It all aligns with the macroeconomics, but you guys don't need to understand the macroeconomics if you can read the charts. So we can understand that the complete edge of the trading leg, if we take, our Gambox tool, which we use for our premium and discount, we take the lows and we take the highs, you can very well see that our point of interest is very well priced in premium. And so realistically, this is the last point of supply for EU to hold, otherwise it would have just continued to rocket. And so essentially, as we tap in here, the first thing I notice is that we have a change of character. This on the weekly time frame. We have our change of character. We also take out this level of demand, which is very nice. And then we have our origin supply up and around these areas. Now, thus far, this supply level hasn't been mitigated over 50%. So 50% would be around here, as you can see the middle line. 50% is the middle line, and then you can see essentially price builds up a double top, which of course we know as liquidity. So understanding that from a weekly perspective, we can understand that if we see our criteria that we need to see inside of this level, that first and foremost, the lows down here are going to go. And the second of all, we know that these lows are likely to go. Now, here's the thing, right? If you are a macro investor, you're not even necessarily have to be a trader, because this is a large 15% move. If you are sat in the euro at this time and you can read a market like this, and your job is hedge inflation, because capital markets are heading into a decline, we're heading into a recession or depression. So essentially you want to be sat on cash, but you don't want to get burdened too much by inflation. When you see a price sitting in areas like this, and if you have a euro holding, I would be and was switching over to a dollar position, because to me it looks like from this that the dollar will regain its control after a very bearish time for the dollar with the macroeconomical. But then we've seen a shift, right? We've seen a turnaround. And so in and around these levels, which perfectly aligns with smart money trading, if we drop down to the daily time frame, we'll understand, and we can break down, we can refine our point of interest into here. And now you'll see that our point of interest hasn't actually been mitigated, but we have created levels of liquidity to take inside of our point of interest, and then we sweep. So now we are inside of our point of interest that caused the decline, the shift of order flow, drop down to the 4-hour time frame, and just wait for confirmation in the form of our lower time frame realignment. Now, personally, as an intraday, it just enables us to be able to pull out anywhere between 40 and 100% a month, instead of these big moves that happen that take months and months, even years sometimes, to play out. But still being able to understand them and being able to trade all along the way is very important to us here. So do keep in mind that we do trade those lower time frames. It's the same concept, right? This market is fractal. So whatever happens on this time frame is first played out on the lower time frames, etc., etc. So it's all the same understanding, it's all the same concepts, right? And that's what I love about smart money. It's raw, and it's completely dissecting the market for what it really is, not what we think it is, which is things like retail, trend lines, and support and resistance, and things that make no logical sense. So just playing price. You can see right here that we have created equal lows. We haven't really taken out the lows, but if we drop down to, I don't know, let's say a 3 hour, you will see right here, our change of character, we'll see that our liquidity has been swept. The sweep, you can see that we have a reaction to the demand, and then the demand gets broken, and the demand is broken from our 3 hour level, which meets all of the criteria of what makes a successful supply or demand zone. Again, if you would like to be recapped on what makes a successful supply and demand zone, go ahead and check out our other videos. We do cover that very much in detail. Sweep, and that essentially is our entry, right? If I was trading on these higher time frames, I'm in alignment with the weekly and then the daily and then the 4 and 3 hour to confirm my bias. Now, if you just want to cover the highs just to be safe, you absolutely can. And if we just zoom out, we'll understand that from a macro perspective, if you understand structure and order flow, we'll know that this high put in this low, and then this low has failed to take out this high, and inside give us our realignment. Now, this realignment is what's going to enable us to understand that this low right here is likely to be weak, and that can be our first take profit. Now, second take profit, as already discussed, for EU in general, can be the lows down here, and that is a 1 to 93 risk to reward. Let's drop down. So just plain price. What do we create? Liquidity to take just before our point of interest, just before our entry, very important. We tap into our level, and then instantly we have our shift of order flow. Now, when the order flow does shift, it's important to understand that we still have levels of unmitigated supply, and then we have another level of unmitigated supply. So essentially at this point now, we're just waiting for one of these POIs to become mitigated and flip. And once we see the flip take place, there we go. That will then enable us to move our position over to break even. So let's just come back out on the daily time frame so we can see this really play out. Let's just see what happens, right? Now, no surprise, where do we have, right? We have our interaction of demand, which makes total sense, right? Levels of demand, inducing more liquidity, and then eventually taking out the liquidity. And then that'll be the lows taken. And there you go. Take profit 1 is hit, and that is a 31R trade, 80% off, or 70% off, however you want to take your partials is entirely up to you. And then TP number 2, which is genuinely for 90 risk to reward. That is a 1% risk for a 90% return. And if we just play price out, let's draw out some, let's go ahead and move these. Let's draw out some of the probable reaction zones, right? So it's likely there could be a reaction from here. It's likely we could see a reaction from here, and likely to see a reaction from here. So these are 3 areas that price will probably have some reaction and interaction with, but likely because of the bank's intention that those levels do end up getting taken. Let's just play price. So the first one, very minor reaction. Of course, as you go down to a lower time frame, it's a much bigger reaction, but then taking the level straight out, which is no surprise. These 2 levels are probably ones, if any has a reaction, to have more of a reaction. Okay, so this one gets traded straight through, but you can see the powerful reaction of this though. So in plays the whole pullback. and taken out. And there is take profit for 90.71 R. And that is exactly how, if you trade a job or if you're not interested in the lower time frames like we are, because this trade has played out for, it's taken, 27th of May to the 29th of April the next year. It's almost 1 year to play out. And now, trust me, 100% in a year is very, very, very incredible. But some people don't want to wait a year for their trades to play out. Some people want to do those 100% in a year. Like we've had some singular trades that have hit 1 to 100 just based off the higher time frame 4-hour objective, let's say, for example, that have taken days to play out. But that is an insight into how a very successful smart money trader perceives the market and the simplicity of the perception of the market, but also the power of it and the understanding of it. It's insane, truly amazing. So guys, if you did enjoy that video, which I'm sure anybody who's watching did, that is very, very much value given out there for free. If you did enjoy this video, please do hit that subscribe button and do hit that like to push this out to more people and motivate us to continue putting work out. Anybody who would like to go check out our resources, we do have a full course on how to learn all of the concepts, then put them all together, and then formulate the trading strategy in the lower time frame, so you don't have to wait 1 year for results like this. You can get them month to month, and that will be linked directly below.